Russ Porter here. We're doing our economic update from May 13th. Now, here's the thing that I want to let you know is that April brought cooler than forecasted consumer inflation, which was really welcome news after the first quarter's more persistent readings. Meanwhile, confidence among home builders declined and new construction activity was softer than expected. Let's dive into those three different areas that we really want to take a look at. Number one is the consumer price index. We want to see what was the inflation like and what were those numbers. It did cool from April. The headline reading was 0.3% instead of the anticipated 0.4% rise. Now it still went up, but it didn't go up as high as they were anticipated, is essentially what they're saying. And then year over year, that number eased from 3.5% to 3.4%, which was lower and it's going in the right direction, but as you can tell, not a huge change. Now the core measure of those numbers, which strips out volatile food and energy prices, it increased 0.3%, while that annual reading declined from 3.8% to 3.6%. Again, things heading in the right direction, but not all that dramatically. So the overall take on this, the CPI, inflation was moving in a really great direction at the end of last year. The Fed was anticipating many rate cuts for them to be somewhat aggressive. And because inflation has continued to rise and has been a lot more persistent over the first quarter of this year, the Fed's just holding tight. You've probably heard it, probably seen it, and they're really holding those rates steady until they start to see some more inflationary decreasing. Let's talk home builder sentiment. Those people who are investing all their time, effort, energy, and money in building new homes, what do they think about the real estate market? And their confidence in the market, it actually fell below the key break-even threshold of 50. Now this comes out with the National Association of Home Builders, their housing market index, and it actually dropped 6%, or 6 points rather, from 51 to 45 in May. Now here's what the chair of the NAHB said, and this is how he explained the difference in that sentiment. He said the market slowed down since mortgage rates increased, and this has pushed many potential buyers back to the sidelines. He also said that builders are concerned about some recent code rules that could lead to increased costs, which also impacted sentiment overall. Now, let's talk housing starts and permits. This really tells us what's happening right now, how many homes are getting started, and then what can we forecast in the future as far as new homes coming to the market. Well, those starts and those permits were lower than expected. The housing starts rebounded in April, rising 5.7% from March, though coming in lower than economists had forecasted. Again, a rise, but not what we were expecting or even what we need. Those single family starts, those homes that we're building, they make up the bulk of home building and are the most crucial due to buyer demand. We're essentially flat at 0.4% decline. There was a similar trend in future construction, with building permits moving lower despite much needed supply. So what that all is saying is that although we need more housing starts, we're not getting it. It's basically staying flat. Although we need more homes in the future, those permits to build more homes actually decreased. So what does this mean? It means that housing completions did rise in April, but softer than expected construction activity this spring could really limit the much needed supply down the road. This bodes well for appreciation and shows that opportunities remain to build wealth through home ownership. That's our economic update and our review of last week. If you guys have questions, let me know. And as always, thanks for watching and I'll catch you on the next one.